damn phones. Babylons can't crack the code.
Back again with another update, quick update on the account, as well as just you know, some info maybe to help out the new trader. And so here we are. We open up, and you know, pre-market we're doing great. Market open, you know, here comes the, you know, the volatility dips in, and then, you know, we start bouncing back, and you can see you know, up over 4%, and now it's kind of going back down. More importantly though, overall for the week, at one point this morning I was up over 10%, but you know, really what matters is how I end the day. And you know, overall we can see that it's trending up, but we just keep an eye. And this is the strategy I'm doing is more of a long-term swing trading strategy, and so that's why we're not so worried about the individual days or hours, but we're more worried, we're more interested in how the day ends. And so we can see I'm still down for the month. We'll see if it will load up. Platform's still not loading up, but it's around 175 bucks that I'm down for the month. But you can see where I'm at. So I added today the MU at 3 shares at like 30, 35, 85, and it's been bouncing around. So with that said, we'll look at the SPY, see what it's doing. Just a lot of movement in the market this morning, you know, with the holiday ending. You can see on here though, I have been watching these key areas, and you know, I've had these marked prior to today. If you can pull up my last video, I uploaded Sunday night or Saturday night / Sunday morning. It's like 1 or 2 in the morning. I uploaded it, and you'll see that I've already had these areas drawn out. And basically, it's just so you know that these aren't just things I put up on today, that they've been on here, and this is what I've been watching. For the new trader, if you're wondering why watching these areas, basically starting out, what I did was a lot of studying, a lot of watching videos, a lot of reading, and you know, at work, that's all I would do all day. I put my earbuds in, go on YouTube, and there's a few different traders that I would follow that would vlog, and it helped me kind of get a better understanding of the market. You hear a lot of things that are contradicting, especially, you know, starting out. You know, don't buy the dip, buy the dip. The trend's your friend, the trend's not your friend. You know, when it's up so high, it's too high to buy in, or when it's down so low, it's too low to short. You know, a lot of contradicting things, and ultimately this channel is just to help you get started, as well as help you develop your own concept of trading and your own trading plans and your own trade ideas. Not for you to shadow trade me or take the trades I'm in or anything, but to develop your own understanding. And if you decide to invest in it, then you've decided on your own free will, and have a plan as far as entering the trade as well as exiting the trade and managing your risk throughout the trade. So we see here that and this is what I've been expecting, that this 263 would hold. And I mentioned in the last video that if it broke much lower below it, you know, start getting into the 262 area, as far as like 262 or below, then I would really look at starting to lighten up on my position sizes and the trades that I'm in, and possibly adding back to them later on a later date. Once I start to see momentum, you know, as far as a reversal. You know, this is just the 5 minute. I look more at the 4 hour and what we're looking at, and this is really what helped me define. Now this one's more on a short term, more recent, and it's just basically based on this right here. that this may be a key level to watch to see if we can break it and close above it. These are more on a longer, looking back, that these have been, a key area or zone, the 268 to 269, 270 area. And if we can get past through this area, then I believe the next point would be the 180-day EMA, and then after that, the 264 area. The 264 area, I think, is a really big, important area, and if we can get through that, then it's a whole new playing field. And for the new trader, they're basically just studying. What I do is I'm using Thinkorswim to chart, which you'll find I'm not unique. A lot of people do this, is they use Thinkorswim trading, or Thinkorswim TD Ameritrade, Thinkorswim trading platform for the charting, alerts, level 2, and then what they'll do is they'll use Robinhood to execute their trades, because it's commission free. So it's a way to save money and to be more likely profitable. Now, if you're looking to day trade penny stocks or anything like that, then in my opinion, I wouldn't recommend using Robinhood as a trading platform, because the execution, it takes too long to type in your order and then send it. And then if you do a limit order and it starts going the other way, then you have to go back in and cancel that order and then type in a new order, switch it from a limit to a market. And that's another thing, being new, you need to learn about your order types. You'll find that a lot of new traders just jump in, open up a Robinhood account, don't know nothing about order types. They'll put in an order, they'll buy it, they'll have no problem getting into a trade, but then when it comes time to get out, they're like, well, how do I get out? I'm telling it, I want to sell at this price, and it's not selling at this price, or it's dipped below that price, and now I'm trying to get rid of this. I'm taking a big loss. What do I do? Or now I'm so far down, should I just continue to hold? Or and they hadn't thought about in the future, if this or that happens, what am I going to do? And you'll find that a lot of new traders, it's exciting to see these people that are day trading and they're making 100, 200, 300, 400, 1,000, however much a day. They fall into what I would call a pattern of selective thinking. They remember that so-and-so posted they made $1,000 today in 30 minutes, but they tend to forget that so-and-so lost $2,000 over the past 2 days prior to that. I try to be as open as possible with my trades. I'm down for the month. I believe it's about 175. I'll pull up on my phone for you real quick. For some reason the app will work on my phone. So earlier, that's for the week. 200, about $200 is what I'm down right now for the month. I was up about 200 November 6th, and we can I'll try and do that. That was for November 6th. That I was up 200, you can really see that, but now you can see here I'm down 200, and that's just how it goes, and I'm not too concerned about it. Up 200, down 200. So for the new trader, basically the strategy I'm doing is I'm doing swing trading, and I have like two stocks I'd say I'm holding that are more long-term investments, and that would be the marijuana stocks. I'm more focused on a longer-term trade, and things that are way undervalued, I believe, that I've bought and have been accumulating as we've been down in this bearish market, or correction market, and a lot of people are believing that this is the end, it's tanking, it's going to crash, and there's nothing we can do to stop it. But if you're new and you study, and you'll start learning about circuit breaker halts and stuff like that. And I think that's another preventive measure that the SEC has come up with to help prevent from a market crash. And so I recommend that you read up on that, learn that as well. As fun, as exciting as day trading may be, as far as jumping in and out of trades, you need to learn about the PDT rule, because that's going to hinder you unless your account is over $25,000. And okay, it's going to hinder you if you're in the U.S. If you're in the United States watching this, and your account's below $25,000, then you're only going to be able to do 3-day trades in a 5-day period, and you need to look further into that and get more information, exactly the specifications of what is considered day trade and how often you can exactly do it. But basically that's going to stop you right there in your tracks for being a day trader, and a lot of people look to use an outside broker. I'd say that's probably one of the biggest topics you'll hear amongst day traders, especially new ones, is how do I get around the PDT rule, and they spend half their time trying to figure out a way around it. And really, truth be told, if you just take on a swing trading strategy to where you diversify your portfolio, and limit and manage and mitigate your risk, then within a year's time, if you're compounding, adding to the account, buying in good quality stocks, that you'd find that you'd be over that PDT rule in a year's time or less. It's basically trying to day trade and not meeting the criteria and able to do it openly and freely, that you take on a lot of risk. You dump in 80% of your account, and it's a small account, and that's what a lot of people understand, is having a small account, you can't just be reckless with it. And especially being new, you have no idea, and you may have a one-hit wonder, but keep in mind, a monkey blindfolded drunk off of tequila throwing darts at a dartboard can hit a bullseye every once in a while. And that's basically the same boat that you're in, being new, is you may hit a few one-hit wonders. You get on Facebook, social media, and you see these people post and show your gains, and they got lucky on some options contract, or some penny stock that they bought into, and it got pumped up overnight, and they got lucky, and so they think, I got this is going to change my life, this was easy money, and only find out within a week later they've lost everything that they made in profits, and then some, if they haven't lost it before that week. There is what they call a 90, 90, and 90 rule. Basically what that states is that, and it's a statistic, that 90% of traders will lose 90% of their account within the first 90 days. And so do not be one of those statistics. Be smart. You're new, small, aim small, miss small. Open up, $50, $100. You can buy a share of Ford, a share of a share of a decent company, and you only make you make 50 cents or whatever, or $2, and you're like, man, that's not a whole lot. Well, you gotta keep in mind, you only invested $100. Now, if the $100 was sitting in the bank, you think you'd make 2% within a week off of it? No. So you gotta keep that in mind. To make 2% in the market off $100 is a decent return. You can see here that I got a little over 2,500, and 2%, a little over 2% of that is about $70. Say we hit about, you can see right here, just give you an idea of the percentage and what it equivalates into dollar value. So to have a $100 account and expect that you're gonna be able to double it, yeah, it's possible. You buy an option and you get lucky, and you end up doubling or tripling your money, but you don't understand. So then you buy another option, you think, well, if I would have bought more, then I would have made so much more, which is true, but you take on more risk. And a lot of people that fell in trading, it's not because they can't get a hold of the right patterns or get into the right trades or whatever, but I would say a majority of it, there are multiple errors or areas of criteria that they do mess up in, but ultimately the number one I think they mess up in is risk management. You'll find that in trading, and if you study and you watch like interviews of successful traders, you'll find that there's a lot of traders that were into professional poker playing that end up getting jobs at hedge funds and big firms that basically they've become successful traders. They've transferred their skills that they learned in playing poker and being professional and making lots of money into trading, and basically that one main skill is risk management, also as well as having a strategy, but risk management and knowing how to manage the risk and when to pull back, admit defeat, get out the trade, versus when to add on and exploit the opportunity. And so, not to say I got the market cornered and I'm a professional, successful. Obviously I'm not. I'm trading a $2,500 account that I'm continuously growing and adding each week to, and this is to basically show you it is possible. But to sit here and you watch a lot of these day traders that you're following right now, and I'm talking about the not the ones that are teaching classes and take this course or whatever and whatnot, but these ones that are starting with a small account like this, and I'm not gonna put anybody on Front Street, but there are a few, and you'll see them trading these penny stocks on whatever platform, and they'll have to keep refunding their account, and you see here that I'm not having to refund it. I'm just adding funds each week, and I may be down one week $100 or $200. I think I was down like $300 at one point, to now turn around and being up for the week, and you can see like there were days last week that I was down, and I was down $100 or $200 for that day, and the next day I'd be up a little bit. But then and we're looking over the long course of time. It won't show my monthly chart. Basically why I'm referring back to the monthly now is because it's been about a month since I've started this account doing these vlogs, and so to just show you where I started out at from video 1 to now, and that this isn't a get rich instant overnight, but this is a longer term growing small account, and being cautious so that we don't blow it up. You'll see a lot of these people that are teaching these classes, and they start off with $500 or $1,000, and then within 2 months they've grown it to from 1,000 to 5,000, and then from then so on. And you gotta keep in mind that they've been doing this for years and years and have plenty of skill in trade, and being new, you cannot expect to come in with a $500 account or $1,000 account, even a $2,500 account, and then just be like bam, making all this money. More than likely, more often than not, a majority will blow it up and have to refund it, and even a bigger majority will quit after losing that amount of money. For me, what I've learned that it takes is patience, a lot of hard work, not just studying and reading and watching videos and studying charts, and understanding different concepts of trading and different types of trading, but also it takes working extra hours at the job, picking up side work or whatever to make that extra income to be able to add to the account to grow it. The bigger the count, you'll find the easier it becomes to make decent money, because I don't have to dump my whole account into as I've diversified, to be up, for the day. I'm up $67, to be up, I think 2% of this account would be, I want to say like $50. And so to be up 2%, each day is $50, and you just do that over the course of a week. It's like $250. And so basically, just be realistic starting out. That's probably the best advice I can give you, is be realistic. You see a lot of people come in with these pipe dreams, and I'm not going to sell you pipe dreams. It's going to take some work, a lot of studying. I spent for my first year learning to trade. I took an online class. It was all right. After it all said and done, I don't think it was really worth the money. It wasn't nothing I couldn't have learned on YouTube, to be honest. If there's somebody out there, which I'm sure there is, other people out there that, if you just send them a message or contact them and ask them like, what do I need to know starting out as a trader, that they'll be more than able to help you and guide you and things to watch and learn. And then ultimately, you see these people, offering these, so-and-so picks, stock picks, and, do my signals and do this and that. And, if you ever want to be an actual trader, then you have to do the work and you have to do your own studying. I always refer back to one of the famous traders, Jesse Livermore, and a lot of things and sayings that he says. And, I'll go ahead and pull up a few really quick. I intend to make this video this long, but we'll just do it like this. This is, where is it? This one I posted the other day, and I like this one a lot. The game of speculation is the most uniformly fascinating game in the world, but it is not a game for the stupid, the mentally lazy, the person of inferior emotional balance, or the get-rich-quick adventurer. They will die poor. And there was you can listen to it on YouTube if you don't have the money or don't feel like ordering the book or whatever. You can listen to it on YouTube, a live reading of the book, The Reminiscence of a Stock Operator. And I've listened to it numerous times while I'm at work because I'm not able to read or study, but I can put in, one of my earbuds and listen to it. Then this is what I'll do. If there's any free time that I have that I'm not at home with the girlfriend and the kid, that I'm able to and I love them dearly, don't get me wrong, but it's hard to study when you have a lot of stuff going around you. And a lot of times the only time I have the time to study is either late at night or while I'm at work on the job and I'm just in my zone. And so that's what I'll do. There's quite a few. A man must believe in himself and his judgment if he expects to make a living at this game. That is why I don't believe in tips. And basically what he points out is that if I receive a tip to buy a certain stock because I got word that Warren Buffett's going to buy it, then I also need a tip to find out when he's going to get out of it. And I can't depend on that. And that's what you learn, that shadow trading people is to be successful in this game, you can't depend on anybody but yourself and your own judgment, your own knowledge and experience. He also talks about, prices are never too high to begin buying or too low to begin selling. And that's true. You think, I'm going to buy in now, we're in an uptrend, and sometimes it works. Now, keep in mind though, you can buy in and it's overbought, and as soon as you buy in, it sells off. But you have to keep in mind now, based on a day trading strategy, then some of these things you may be more cautious to apply to your trading. I think he was kind of considered a day trader, but I think as you get through the book, you realize that he went from being a day trader to more of an investing or swing trading, and he would get into these big trades and he would hold them, and that's why you see, like, on one of these, it never was my thinking that made the big money for me. It was always my sitting. And you'll have to just basically listen and read the book, and you'll get a better understanding of the type of trading he did. That's probably one of his bigger quotes. And this is a good one right here. Instead of hoping, he must fear. Instead of fearing, he must hope. He must fear that his loss must develop into a much bigger loss and hope that his profit may become a big profit. Basically, instead of hoping that it turns around because you're already down, be in fear that it's going to continue to get bigger. And when you're in profit, instead of fearing that you're going to lose some, hope that it's going to continue to grow. And it's just the psychology behind trading. A lot of people don't understand until they start trading how rational thinking and judgment seem to go out the window when you have your own hard-earned money on the line. And this is a simple one. Everything you need to know is right there in front of you. Always sell what shows you a loss and keep what shows you a profit. I like this one a lot as well. I like a lot of them, they says, but you'll find get out when you can, not when you have to. So I have in my trades a point that I'm willing to take a certain amount of loss. After that, I'm getting out, and it's not because I have to, but because I'm not willing for it to take that big of a drawdown on my account. I'm not being forced to get out, but it's reached a point that I see that it's not doing what I thought it would do. So obviously I was wrong about this trade, and it's time to get out. And there's nothing wrong with being wrong. There is something wrong with being wrong and being unwilling to admit it and get out. It ends up costing you a lot more money than you realize. How important is it for you to be right? How much are you willing to let it cost you to be right in order, just to be wrong and make money? And that probably doesn't make sense, but over time you'll start to understand what that means. So anyhow, I guess I'm gonna go ahead and wrap it up. You can see, was up, over 4%, and the market's, having a pullback, and now I'm only up close to 2%. And then on the weekly, I was up over 10% earlier today. Now it's pulling back, and hopefully it finds some support, where the SPY's at right now. It's the 4 hour. So you can see it's just hitting this point. It just is having trouble staying above it. Kind of frustrating. We need it to keep on keeping on. We see it's pulling back to the VWAP, it looks like. VWAP is a volume weighted average price. It's an indicator that a lot of day traders use, even swing traders. Obviously that's why I'm using it. And so it's had this pullback. It looks like it's finding support in this area, and it's hanging around the 9 EMA, which stands for exponential moving average for the new trader. And these are indicators that you'll find a lot of people use, and basically it just helps you. It doesn't necessarily mean it's going to do whatever it does, but it just gets you a better idea of what people are seeing, and so it helps you to kind of see what the overall market's doing, versus just a naked chart with no indicators. So go ahead and wrap it up. That's been quite a long recording. We're coming up on 30 minutes. So I'll do a video tonight showing you where I end the day. Pull it up right before I end the stream or the video, where I'm at for today right now, and we'll see where it ends tonight. I believe I'll end in the green, and I expect that the SPY will end up higher than what it opened up as. So hopefully this is the start of pulling out of this bearish or correctional market and back to the bullish side, but only time will tell, and hindsight's always 20/20. I cannot enforce that upon you, regardless if you watch me, other traders. You'll see traders have a tendency to go back and be like, well, if you wouldn't did this or that, you'd see up here that you'd be up this much, and it's like, yeah, you can tell me that now because it's already happened, but what's going to happen from this point on? And so that's one of the things I try and let you know is, and there's been times I've been completely wrong, that I thought like we're going to break through this point. We've already tapped it, twice, and closed right above it, and so the next day we're gonna open up and keep going, and it just tanked. And I'll be the first to tell you, I was wrong. It didn't do what I thought it would do. No one can be 100% right all the time in the market, but we're looking for a majority of the time. And so this is where we're at. I talked about this 263 being an important area, and if it's able to hold it, then I would look to see us come back up, start testing these levels, and hopefully breaking through them. And if not, and it starts selling off, that I would start taking off some of my positions, and look to accumulate those positions back, and then some later on at a lower price. So that said, we're gonna call it a day. Just manage your risk for the new trader. Aside from learning order types, indicators, focus on learning risk management and how to manage risk, not just what a good reward risk ratio is. Anybody can tell you that. You can probably Google it and it'll tell you. But learning how to manage risk, learning not to take half of your account, or 60, 70, 80% of your account into one trade. You can make a lot, but you also leave yourself open to lose a lot. Aim small, miss small. You can either get killed and blow up the account in one trade, or you can take a bunch of small trades, give your chance some time to learn. You may die from 1,000 cuts and blow up the account, from 1,000 small losses, but you've gotten to get some screen time and some experience, versus taking one big trade, blowing up your account, and you're out of the game until next week when you get paid. And I think that's a lot of what new traders do, is they make a mistake of dumping their whole account into one trade. They get rich quick, and they end up blowing up their account, and then they're out of the game for a little bit, and hopefully they come back and don't give up so quick. But starting out, you take a bunch of small trades, make a bunch of small winners or small losses, or 50-50. You've gotten a chance to get screen time, to get an idea, see how the market moves, the type of games people play on level 2, how people try to manipulate it, and how the market reacts to news as far as what's going on in the world and whatnot. You get to learn about ETFs and correlations between certain ETFs and commodities, and the dollar, and you get to learn a lot of different things. But if you end up dumping your whole account into one trade and it goes south on you and you take a big loss, the probability is you're not going to be around much longer if you keep trading that way. And that's one of the things I stress upon a lot of people starting out trading, is we're looking for a strategy that works over a long course of time, not that just makes you a lot of money in one day, because if it makes you a lot of money in one day, it's going to lose you a lot of money in one day as well. We're looking for stuff that can continuously build your account. What's the point of making $1,000 if you have it for one day and then you end up losing that and then some the next day? So like I tell anybody, this is a boring channel, perhaps more educational, I'd hope, than anything, for the new trader. It may be boring because I'm not sitting here giving you stock picks. I'm not giving call outs, buying at this price, get out at this price, if it does this then do that, or whatnot. But ultimately trying to help you develop your own concept of trading, your own trade ideas, and the type of trading that you want to do, not the type of trading that I do, or that Joe Blow does down the street and supposedly making these thousands of dollars, but really what's realistic for a new trader, and the best type of trading they can start out with to give them the best chance of success as far as staying around long enough to learn. And that's basically the purpose behind this channel, is to help the new trader stick around as long as possible to learn what they need to learn in order to become a successful trader, versus them getting in, dumping $1,000 in their account, buying 500 shares of one stock, tops or some DIX, whatever, DCIX, whatever bullshit stocks, and then the next day it fucking tanks because somebody pumped it up and you bought in because everybody on Facebook was saying it's going to the moon, and so then you bought in, and then you come find out it's going to hell, and you wake up and your account, you just lost half of your account in that one trade. And so I've had those days starting out being new. I've done that. I've made these dumb mistakes, and that's why I'm able to do this channel, is because a lot of the mistakes I talk about on here, I've made them as a new trader. And I've had the mornings where, you know, I was up a lot in one trade, got greedy, and all of a sudden it took a fucking turn and it got worse really quick, and I ended up getting out with like a $700 loss, and it was one of my biggest losses I'd ever had. And I didn't want to wake up. I just wanted to go back to bed. I didn't want to go to work. I didn't want to do shit. I was so pissed off at myself, you know, and, you know, for not just taking the money when I had it. And then I've had trades where I don't know what the hell I was thinking. I bought in out of FOMO, fear of missing out, and as soon as I got in, it just kept going down, and you know, I'd take like $100 or $200 loss on that, and I'm like, shit, man, I can't be taking these kind of losses every day and expect to stick around very much longer, you know, especially on a small account. You know, I even said the other day that, you know, like a week or two ago, I was having a pretty consistently down week, and like one day I think I took like a $200, I was down like 200 for the day. The next day I was down like 100, and I was like, shit, I can't keep, like, I got it diversified, I have it, you know, low position, you know, low share size in each of my positions. It's, you know, each position is not making up that much in my account, but I'm like, I can't keep taking these $200 days, like down days, where I'm not gonna be around much longer, you know. And I talked about it, that I would be more concerned than what I was at the time, but the overall market was down, the SPY, everything was going down. So what I did was I started accumulating. And I said, if it reaches a certain price point, then I do have to get out because it's too big of a drawdown. Even though I have multiple positions, if all of them are down, that's just too big of a drawdown on the account. And so it's time to start lightening up my load. And, you know, I talked about it not too long ago in one of the videos. And you can see now that things are turning around, that the skies are getting sunny, and hopefully that this is a start to a new sentiment in the market. You know, the market's always changing, and so I hope to expect to see that this momentum continue up. You know, there's some trades that not very many. There's a few that I'm up in. That's not a whole lot, but it's something. And then there's some that I'm down in that I'm starting to come back and make my losses up in, and that are getting closer to being up. You know, down $8 in this one, with $1.22.72 is my average cost. We're at almost $20 a share. So ultimately we're looking for long term. So, you know, the next month or so I'd expect to be up in this trade, and a majority of these trades I'd expect to be up, because the overall market's down and it looks like it's starting to kind of turn around. It's still too early to tell. You can see that this area is seeming to be a resistance level, this 267 area, and so we really need to start breaking through it, and without any issue. But this dream has become way too long. Working on building my own desktop, because these streams, I got so much running off of my laptop. I got, you know, one laptop running 3 monitors, and, you know, there's an external video card that is allowing me to do this that I have plugged in, and then on top of that I got the mic and the camera hooked up, and so it's a lot going on. And so some of these videos tend to freeze up. The audio keeps going, but the video, the picture, freezes up for a second or two, and I know it can be annoying. So working on that, but this video has been way too long. So I will post tonight where I end the day, once I get home from work tonight, and, you know, just trade safe, manage risk, and I will talk to y'all tonight. This is where we're at, and hopefully we just keep trending up. So with that, manage risk, and manage risk. That's all I have to say. Have a good day. See you.